Greetings, market rebels. Welcome to this week's sector situation. It's actually Friday, September 1st, 2023. It's about 2:20 p.m. here on the East Coast. I'm Wayne, and we normally record these on Friday, but as I noted in the macro measure video, I've got friends, family coming into town. I've also got family traveling that I've got to help coordinate. So it's going to be quite a busy weekend. And then unfortunately for Ryan and myself, Monday is not a day that we're off. We'll be working on the newsletters and all the ideas for the upcoming week. So that'll also be a busy day. So with that in mind, I decided, let's see if we can get this out now, make it easy on folks maybe to view at some point over the weekend a little sooner if we get these uploaded, and maybe more convenient for everybody overall, and just helps me avoid a real serious time crunch. So with that, we will put Sunday's video out here on Friday, and just double checking things to make sure we are good, and it looks like we are. So let's flash our trusty disclaimer, and also we will flash our trusty intellectual property rights notice. And then, as I typically do, I'm just going to flash this week's stream from the macro measure video. It just up this week's updates. Decent amount of last week's material left over, just still relevant, I think. And then we did cover quite a bit in that video, but it's worth taking a look at least this, if you can sort of decode what this is all about here. But yeah, this will kind of frame things for us. So with that, I can start to get ready to switch screens. So let me just briefly stop the share, and we will get into the sectors. And I'm going to do that on my main screen, which is screen number 3. And we'll start out with our grid of 12 that we typically start out with. And I'll just try to make a few observations, then we'll look at these on a better chart, or a life-size chart, and then we'll kind of wrap things up. So we kind of got that risk on again, right? We got that. We were struggling last week to really have a strong lean. We said play the range until it breaks out or breaks down. They broke it out, and it just kept going until really Friday. So most sectors are having a pretty good week. Some of the former leadership sectors like XLC, XLK definitely came back strong this week overall. Every sector is really struggling today, that had a really great week, with the exception of just a few. So I would say XLE clearly, right, had a good week overall, but today's a news-driven big move. That's one we've been saying, keep an eye on. Just on the bull side, we were sticking with it because, look, it's showing bullish technicals overall, right? Overall, it has been. That's a good sign in a way for the economy, but at the same time, the ones we really look at are that one, financials, and transports. And so if they're all acting well, that's usually good for a bullish take on the economy. Well, they're acting really well over here. Financials, they did fairly well, and so did the transports, but they're not really on fire the way some of the other sectors like technology are. So I would say, look, it's definitely a mild win for the bulls at the very least this week. If we hold where we are in the last hour and a half, you don't have a real massive sort of sell-off, profit-taking sell-off in front of the long holiday weekend. But there has been a pretty rough Friday again in some sectors, and even defensive sectors like utilities, like XLP, like XLV, they're all getting hit pretty hard today. And so is, for that matter, so is XLY. So I think a lot of what we saw, at least initially, was driven by the fact that they were able to put risk back on, mark things up, make sure really that the August monthly candle did not look awful, didn't look like it was about to lead to more immediate downside, more downside pressure. And so the sellers were kind of taken out early, and now, right, you're probably seeing profit taking and a lack of wanting to hold over a long weekend and a lack of conviction. I think this move was largely engineered this week. I don't think it was really indicative of things being wonderful, but the bulls have held sway, and they've been able to do it largely in the face of the rising dollar DXY on Thinkorswim. That's the symbol, and then TNX, of course. Both of those are up today. I think when they started to really perk up more, that's when this morning's highs were really almost locked in. You can never say locked in completely, but that really then began to bring pressure, brought the sellers out of the woodwork, and then you're seeing, I think, some profit taking and some squaring up in front of the holiday weekend. But the other things I think we can draw from this grid is that nothing's really super overbought or super oversold at the moment. And that kind of fits in with our take on the market, which is not really a strong one. We're still probably giving the benefit of the doubt to the bulls because the SPY, the QQQ, they're both above a rising 100 SMA. Today, they were both really above all of the SMAs, the simple moving averages that are popular that we keep an eye on. So we do have to give them the benefit of the doubt. The third year of the presidential cycle has been playing out really well this year overall. So that says we rally into the end of this year after a couple of more months of volatility. And then next year is also a pretty good year. It's the second best of the 4-year cycle, with this year being the best of them all. So having said all that, right, it's sort of a little bit risk on earlier in the week, now a little bit risk offy towards the end of this week. I still think that the fundamentals are not all that spectacular. And so I'm not so sure the market's in sync with them at this point, but again, definitely could be proven wrong with that. And also, I don't think that the market is really taking interest rates as seriously as they should. And I still think there's a lot more risk out there than the market thinks there is, the way the market's pricing things right now. But again, that's all just my opinion. It's just from reading and just having done this stuff for a long time. And it's not even something that would be a rare take of mine. Like, I feel that way quite often after things have jammed and we have interest rate developments like we've had lately, because I just always tend to focus on what rates are doing. Just a legacy thing, I guess. But I still believe that interest rates matter, and I just have a really hard time believing that rates, having made the move they have had as quickly as they have, and staying sticky up here for longer than bulls have sold to us, I don't think that's a great thing overall. So I still think that produces trouble, and I sincerely hope to be dead wrong about that everything works out wonderfully for Americans and really other folks around the world in their countries too. But aside from that, we could start taking a look at things more closely. But this is a little bit troubling to me that the transports just don't seem like they're there yet. Now maybe they're a laggard, right? Maybe the XTN will really start to go. Another important sector in the modern times is housing and the real estate. That really has been middling this week, right? Up a little bit net, I think, but really not a spectacular finish. And so maybe we'll pick it up there with XHB on this chart that we usually use to check things out a little more closely. So let's take a look at that important sector, XHB. And boy, it's taking a while here. A lot of times Thinkorswim really slows down when I launch Zoom and do the recordings. For some reason, it just doesn't like that. But you've got to give them the benefit of the doubt, right? Rates are off a little bit from the highest highs, but this stock is very little removed from the highest high it's got on the chart we're looking at. I should say ETF. My bad on that. So they righted this ship. They're above all the SMAs. The longer term SMAs are all rising. So it's hard to really say really terrible things about this. But what goes through my mind, especially if these rates just do not back off and find a way to start threatening to take out the high over the next couple of weeks. I don't know if they'll do that, because there's a lot of talk that the Fed sits tight and that they might be, again, using any kind of shred of the Fed sitting tight to justify just buy like they always do. I don't know that the Fed sitting tight is really buy, but in the short run, it could certainly mean that they do that, and we still want to trade that as bulls if they do go into that mode. but this recovered very nicely. Now you just have to think, if rates do start moving up, the dollar's moving up again, as they kind of have been in tandem, does this potentially, lead to a lower high? And you just don't know, right? It's just too early to say on something like that. So let's just I got to get something out of my way there. There you go. I want to make sure this is recording the right screen, and it does appear to be doing that. So I wouldn't, again, I would wait for some kind of a crack of support. You could draw a support line in here. You could use the 20-day or the 50 in light blue and gold respectively on here, but that's down a ways. But right, it's just too early to pick a fight because they just don't want to let this thing go in a big way yet, right? Yet. I still think, to me, this is a problematic area. XLRE, really, this is really more the commercial side. That's what led us to this discussion here. But that, boy, it's slow. That's struggling a little bit more, right? So that doesn't look as good. That's, to me, is also a big problem. I think obviously this is a really big problem potentially if commercial real estate's in for some really rough times, but we'll see, right? I don't think that looks all that wonderful. Maybe that, is the leader. If we do have a sell-off in real estate, maybe that starts to bring a lot of other things down with it, including XHB. But while we're on the subject, let's take a look at the ETFs related to housing that we have been checking out for the last couple of months, since we can't really get that lumber future. And they did put a nice little pop together. Remember, the TNX has been dropping until really the last session or two. It arrested it. TNX arrested its fall yesterday, and TNX is rising today. So you could see that kind of stopped that in its tracks, or vice versa, whatever you want to call it. So we have to see, right? Again, I continue to insist that folks at least glance at what's going on in with the dollar and TNX and your bond yields in general, just because I don't think that they are irrelevant at this point. I kind of think they're very relevant, and you could see CUT doing just about the same thing. So stalling out, and you have to wonder, is it a lower high? Is this kind of like the last hurrah for XHB, or is it somehow going to stay intact and defy conventional thought, which I'm a part of, which always scares me. But we'll see. We'll have to see on that. While we're here, let's check out the copper situation. And let's see if I can just get copper here. This is, gee whiz, it is slow, and I'm sorry about that. But yeah, when I record with Zoom, it just seems like Thinkorswim goes into hateful, spiteful mode. It just slows down. It's already slow from all the stuff I've got cooking on here, and then it just slows down to like almost a screeching halt. It's a little frustrating, to say the least. I thought, there you go. Let's get rid of those percentages, hopefully. But yeah, I mean, failing at the 200, the 150, which are right near today's high. We've been saying this for a while. Overall, this thing doesn't look great. It's not it's not down for the count. We'll give it the benefit of the doubt if it tries to do something, but it's not really, to me, like, it just keeps telling you like things are not on fire in terms of the global economy. You're just not getting that. So again, just kind of like same kind of reaction we typically have there. And we would expect that oil futures, I haven't looked at them today. Let's just see if we can get, we'll just see if /CL does the trick for us. And yeah, they're on fire, right? So I think we noted that, look, they were still holding above the longer term SMAs. Let's see if they can get back above the shorties, and they have, right? And so fortunately, that trend has stayed intact. They continue to come in for those names a little bit, not as robustly as I would have expected, seeing how well this continues to hang in there. But my guess is, right, with this kind of relentless march this week, you've got to be careful in there a little bit, because you're getting, for example, the 2-hour RSI rounds off to 90 right now. So this is short-term overbought. The 4-hour RSI rounds off to 90. So not to say that it can't go up. It's just that, boy, that it's gotten a little bit ahead of itself here in typically, like you would normally see a pause or a pullback. I do think there's a lot of money just headed into there though. So to me, like that continues to act well. So we've been saying that, overall we'll see what it does. Does it hold? Does it go? It kind of had that corrective spell, but it started to do better, and got to give it the benefit of the doubt. So that's a quick look at that. We'll just do XLE as a reference point, but of course XLE is going to look really good too. There's a pretty solid correlation there. So yeah, I mean, to me, like this still has more potential. May have gotten a little bit ahead of itself. Maybe a couple of days of pausing and then resumption would do it better, right? It would be better for it overall. So those are some of the typical things we look at now. Let's see if we can take a look at something like IYR, for example. Another real estate view. Again, very similar to what we were looking at with XLRE. So that big real estate not looking all that great. Again, to me, that's concerning. This XLF, it's worth probably bringing that up. Let's see if I can get back to here and just shift this for us while that loads. Taking a little while here. My apologies again. So we saw this in a mini view. I mean, clearly the bulls have come back in. They've got this above all the SMAs again. Most of those are mixed. If we look at them all, you've got some that are, most of them are mixed. Probably the longer terms are flat to a little bit bullish. You want to include the 50 in that, but the other shorties are kind of mixed overall. So not a really clear picture from the moving average perspective there. Potential lower high put in here, does have the gap closure taken care of now. So we'll see how it closes today. But overall, the trend is still up in there. We have to say that. But I think you have to just kind of put it in your mind that if this does top out here and roll over, that could be a bigger problem than it looks like right now, because you could lose this. This could effectively be your corrective phase in here relative to this trending phase. And then you probably would assume there's at least another attempt at selling off it. If you get a whole nother leg of selling that somewhat mimics that leg there, you're going to have pretty severe price action, right? That would, if we were to extrapolate that kind of a thing and just ballpark it, that's going to put you down there. That's going to really put this uptrend in jeopardy. And I think the uptrend's kind of barely clinging to life right now. So that would be something that could flip poorly, I think, right? Very quickly. What else? So yeah, so another thing is, let's take a look at the staples first. But staples, we did have a little bit of paper. I may still add an idea on this, but they're bearish potentially on staples. I did see a pretty decent size hit come in. I ignored it initially, but it's starting to weaken now. It was kind of trading away from the hit. So I might end up doing something here. But the bottom line is that this is the kind of like the failure. So I shouldn't have done that. This is lower high right back in here, which we're kind of on guard for in the major index ETFs and some sector ETFs right now. This is what it can lead to, right? So you get a whole nother leg lower after you put that lower high in, and then you lose support. And I would say the same thing could happen here, where you have this strongly downtrending leg, you have this corrective action to that. It isn't able to really make much traction and hold up. And now it's in jeopardy of losing support, right? Flatline-ish type support here. And if you do that, you could have a whole nother leg lower. And that really puts things in jeopardy. So I'm not sure what to make out of that, because remember, typically that is a defensive sector. So it's interesting in a way that they're selling that off. They're not willing to, they're not at this point, despite what's happening right with the TNX and other yields and the dollar, they're not really that worried about owning something that's considered more defensive. It seems like they were able just to go back into XLK, XLC, and a couple other areas like XLB, and they just piled into there, and they're content for now. I'm a little confused by that because I think there's some warning signs that are out there that would normally bring about a little bit more defensive positioning, but it's just really not there yet. Here's your discretionary, right? And so that doesn't look all that wonderful. So you would think, right, okay, it had an overall decent week, but it's kind of closing on a down note. And yes, it's better off than it was, but you also could have a lower high in there. So I think with a lot of these things, just like I covered in macro measure, you've got to wait to see if this stuff does continue to back up a little bit, where the supports, holds, and tries to go up, right? So that's what I think you have to wait for. And if it doesn't, that's obviously a big trouble, because if both discretionary and staples are selling off, what can we really infer from that with respect to the American consumer? That is not a good sign, considering that consumer spending, the consumers about 2/3 of the economy. So you really have to wonder at that point, like, well, okay, well, how can you buy all these other things up and you're telling me the consumer is not that great? Is it because you're thinking that it's just a mini swoon? I don't know. Just thoughts running through my head. Interestingly, right, XLI did have a decent pop, but it ran out of gas very quickly. So the industrials are not really finishing the week very strongly. And I'm just going to leave percent here because I'm really talking more about the behavioral aspect of what happened here. Would you take it as a win that you got back above all the SMAs and that you are holding above them? Yeah. The last 2 days, though, kind of rough. And again, another thing that's at risk of maybe like visually this high, then maybe another lower high. And so a little concerning. Still long-term rising SMAs, and even most of the shorties are upsloping, and you're above them all. So it's that Austin Powers mixed bag baby thing we talk about here and there, because it's not that clear, right? You're just not at a juncture. Like I said, the worst thing that I think that bulls could do is just keep jamming things back up, because I just don't see the justification for that right now. And if they did, that would just get things closer to the highest highs, overbought, and potentially set up a pretty ugly double top. On the flip side, I think what would be good for bulls would be if they back this thing off a little bit, back into this sort of range where all these SMAs are, find support in that range, and then go again, because that would put you with that higher low to work with versus this kind of cluster low you got here. Then you could take this high out without having to move all that dramatically higher. And then that lets you start to attack other highs. And so that's what you want to see if you're a bull, if you ask me, not just boom, we're right back up, because that to me, with where rates are and the fact that inflation really isn't backing off enough, that would be more of a dubious rally scenario. If you ask me, it would be more of a short covering, kind of overly overdone, kind of euphoric too soon type of thing. But again, that's just more of a gut take commentary than it is, hey, here's the numbers that prove that. But yeah, I think with XTN lagging, some of these consumer areas not looking that great, real estate not looking great, defensive areas not looking great, even XLI not looking great, you're not left with much. And so you've got your energy, you've got your your energy, you've got your technology, all that kind of stuff. And that's great. I mean, that it is kind of great that at least some things are looking pretty good, but you're at risk of lower highs on XLK and XLC, right? So this is why I'm saying I still think you have to wait this thing out a little bit further to see if it's a lower high, potentially. It's too early to call it a lower high in my book. I want to see more price action and see how things fare. But that was a pretty big leader, and that with this close, you just like we jammed above everything on Tuesday with that nice green candle. All it would take would be a rough candle, and we'd be right back below a lot of these shorties, right, including the 50 as well. So that could flip around pretty quickly. So again, that kind of fits this. All this stuff to me at this point still fits with that third year of the presidential cycle, where September is not typically a good month. It's not even typically a good month in the typical year. Not really a great month in this particular year, third year of the cycle. And you should expect volatility over the next couple of months in both directions. So to me, like it's sort of all setting up that way still, with a little bit of warning signs, but it's really hard to get too table pounding bearish quite yet, with financials being able to hold out to a certain degree. Energy is holding out. Now, I think the energy is due to its own factors, but it's still holding out and hanging out. I think, honestly, to me, like that's a negative in terms of the pressure that puts on the consumer right now, because gas prices are pretty darn high in relative terms right now. So that to me is not good, and neither are the consumer sectors. But at least right, these are the financials are hanging out there, which is again between energy, financials, and transports. Those are my big three I have to keep an eye on. And I think you really have to keep XHB, XLRE in your mix these days. And XHB is hanging in there too. So we just got to trade. I think we just got to trade the best we can in the short run, and let a little more trace out, and then we can maybe get a better read on this. And it might take a little bit longer than we're hoping. Like I'm hoping a week, another maybe 2 weeks, we start getting a better read, if we can start to lean a little more strongly, and then maybe get aggressive with calls or puts depending on how things play out. But you might be stuck in this, and I noted that in macro measure the past couple of weeks, you could get a lot of zigging and zagging over the next 2 months, and it wouldn't be out of the question, and something that's atypical. It would actually fit with what you typically see. So it could be that we're setting up for that, just because we've got this tough situation on our hands as we look through and across the markets into the markets, and we just see these sectors kind of at odds. There's just some really different things happening in different ways that are not really clear. I don't think there's a lot of things you can hang your hat on if you want to be super decisive right now. There's a little bit for everybody, and that means the right tough to call. Not really a big strong lean. I'm trying to think if there's anything else we can talk about or cover that I haven't really gotten into. XAU. We'll talk about the precious metals. They were doing pretty well, but as we've talked about it in both videos today, when the dollar and the yield started to perk up, and when they kind of both arrested their decline yesterday, you could see that XAU acted inverse to that, and that doesn't really look good. And I think a lot of you may remember that I did add a bunch of bullish ideas last week. There wasn't a ton, but it was a decent number of bullish ideas that got put in this sector on UOA, and I was looking at it more for quick pop potential rather than this is a long-term buy. And you can see that I think that long-term take that I've got in there is still valid, because I just have not seen enough, let's say, technical complexion changeover, right, to more of a bullish take. It could be doing that right now, but I haven't yet myself to see enough. So I think if this is a lower cluster high, it's putting in below that 50 here in gold, just a couple of bad days and you could be below all your SMAs all over again. And certainly that could lead to a double bottom off of this recent low, and maybe you go from there. I mean, you can never rule anything out in terms of what could happen next in terms of the price structure, but just not acting really, really well. And you can't be surprised with the dollar and yields doing what they're doing. So I think that to me is still unclear. It was worth a look, because you never know, right? You just don't know if there's geopol or whatever lurking. You got to prepare yourself, even if you don't see the technicals as perfect. But yeah, I mean, I'm not surprised that this wasn't able to follow through in a big way. You never know, but that's just the general way that I look at it. I'm trying to think if there's anything else I can share in sector situation that would help out. And let me look across one more time here. And I don't think there really is. Maybe the only other thing I could look at is XBI. It just comes to mind. XBI would be your biotech, S&P biotech ETF. And if it comes up, it would be helpful. There you go. And so that is interesting, right? At least we got that. So I did see some action in there, and that could have to do with seasonality. I don't have this in front of me, but I do kind of remember that for some reason I have this recollection that this sector, there tends to be developments and announcements, maybe from the FDA, so on and so forth, that tend to happen in the fall, more so than other times. So what I would, and I could be wrong, it's just kind of a memory from way back, but it does have a higher low end versus here. So that's a little bit of a nascent sign that maybe things are improving. It's been correcting for some time, and you can see that, and it's doing a little better finally this week. And if this starts to lead to something, it could be above all those SMAs fairly quickly, right? It wouldn't take much more for it to start to go. So I would think, though, right, that would be more of a risk on type seasonality thing. So that could be something to watch, not only just for possible trading opportunities or names that develop in there, but also it could be a sign that the money is willing to be aggressive in terms of putting on risk. And if that's how money's acting on balance, right, that probably does bode well for this third year to stay on track by the end of the year, that we do get that third year payoff towards the end of the year and into next year. And of course, like, as much as I disagree with that in terms of how I think the economy's playing out and things like that, it doesn't matter. I would still trade it. And that's what we do. We trade the charts, trade the price action, and I'd gladly be wrong about my concerns, like, for the economy, and that could be it. If this takes out that 100-day, starts to act better, you might get somewhere, and that would be probably risk on, as a way to say there's more risk on is occurring, and these guys are still willing to deploy money aggressively in some areas that can be speculative. And if that's the case, that probably means that the overall market is going to be supported. When in doubt, they'll support it or try to add to it. And so you'll end up sustaining rather than getting crushed, and so on and so forth. But I don't want to sound overly optimistic and end that way. I still am very concerned about a lot of factors that are out there. I think being smart and doing what you can, being reasonable with your goals, getting some good moves, not overplaying your hand, taking the money and running, finding your next piece of low-hanging fruit, all those types of things to me make sense until this market sorts itself out a little bit more, including the sectors that we just saw, because I think these are not very clear at all. It's very odd to me that a lot of these defensive sectors are struggling, and then even some sectors that are normally would be like, okay, that's risk on, that should be working, and not all of those are working either. Some of them are, but not all of them are. And I can't believe I almost forgot to talk about SMH. That was the one I kept trying to think of that wouldn't come to me, and I thought it was XBI, but it wasn't. It was SMH. So the SMH has been one of our key things to look at now for, well, I guess it's been years really, but certainly this year we've looked at it quite a bit. And let me just get rid of the percentage on this one. But as many of you know, I've got this series of support and resistance lines that I've had in here, and we noted how these lines have really been money. I mean, they've really been lines that have continued to be relevant. And so, I think that's your hope when you put lines in place, is that, and a lot of people dismiss this stuff, but I just feel like these are visual. It's a very like simple old school technique of being able to visualize where things are, where supply and demand tends to be on a vector or an angle. And so this level that I just adjusted there, you can see that, that you're struggling here. Things are a little bit better technically here, but weren't able to get through. But remember, the way that I would look at this would be, if they just back this off small from here and then go again, they'd be really within close proximity to what was the sort of middle of the larger channel, or to the resistance line, whatever you want to call it. And then you'd be able to probably get through more easily. And then you may try, right? You may have a better try or attempt to revisit this line here, which I'll extend out for us. And again, Thinkorswim is bogging down so bad. That's why we're kind of operating at this reduced speed. But that would really be the next level, that kind of 165-ish, which would be a new high, right? So you just can't rule anything out with the gang. They're incredibly crafty. You just got to do the best you can at all times, and that's all there is to it. But you know, they did struggle again at the resistance line. Last time it got knocked down pretty hard. We'll see if there's a little more give back. But remember, now with where they are, they've got a lot of support in the forms of SMAs waiting for this should it back off. So you'd expect some players to step in there, and that might make it harder for this to go down without really strong news driving it, probably driving the market itself. But otherwise, right, you can't argue and say, well, no, that's no longer in the uptrend. It is. But does it have a lower high in place after breaking the strongest part of the trend? Does it have this low, right, that gets put in? You put a lower high in, do you start to threaten it? Those are the things we have to think about of how this could unfold. But again, right, all they really need to do is have maybe one or two more good days, and they could be making new highs. And you could be breaking out and above there, right? You could be then on your way to that 165-ish and change, and then beyond. You just don't know. And so if we give it a little bit more time on this view, there's probably a larger channel that we're operating in, and we are, right? You could see that channel goes back to here. And if we took this line out, this is what I've always found, is that in many cases, you're just, if you take too narrow of a view, you're only looking at a little bit of time and not enough time. You don't realize that you're working within an even larger structure. In this case, it's a rising, uptrending channel, and Thinkorswim's so bogged that it got me there. Let me just try to complete that for us, and then that'll be a wrap on the sector situation, because it did go a little bit further than I expected it to. But hopefully it'll be helpful to folks that are trying to look at the markets these ways. And boy, Thinkorswim's got me really bogged down here. My goodness. Now, let me see if I can adjust this particular. All I really wanted to do was adjust this and bring it out for us. There, it's blue. Let me grab onto it. Let me just extend it out. And if we do get it to where I'm not even trying to get super precise here. I just want to give you a ballpark idea. But yeah, I think that's going to put you near that 175-ish, right? That you would eventually work your way to, and that would be quite a move, right? That would be what, about 19 points, and so you're looking at from here, that would be more than a 10% move. So that, of course, we've got it, and we do it incrementally. Our first target's going to be the former high. Then we're going to look at that 165 where that resistance line extrapolates to, and then through there, I would look at some fibs and other things, but through there, my target's going to probably work out to be about 175-ish as a ballpark on there. So it just depends on how far it's able to go, if at all. Remember, if it hasn't gotten through this resistance yet, it may not, right? It may get stopped again. But that's the thing. This to me across the board feels like a juncture of just don't get too dug in. Trade what's there. Wait for more price action to unfold before you get too aggressive, believing the market's about to do this or that. And then, of course, when you're at that juncture where you start believing that, check your oscillator levels and just make sure that things are not too extended, that there is still enough fuel left in the tank they want to keep going. So I think on that note, I'm going to wrap things up. I'm going to wish everyone a happy, healthy, safe long holiday weekend. I hope everyone has a great time out there. Hopefully recording this video early by a few days will let folks catch the video when it's more convenient for them at some point over the weekend. And you won't have to cram it in on Monday night or something along those lines right before we get started. We're about to get started on our new trading week. So again, thanks for tuning in. Like I said, I hope something helps you out this week or in the future. And I'll wish everyone the best until next week. Thank you. Thanks for tuning in.